Hey guys, welcome back. In today's video, we are talking about AMC making billions, the massive demand for AMC shares, $2.7 billion worth of synthetics, and many more in this video. First, we're taking a look at this from Adam Aram, who talks about AMC and Odeon theaters attracting more than 5 million guests globally. Biggest domestic weekend of 2026 so far for AMC. So now we are seeing the 5th movie to open above $75 million domestically in the last 2 months. So just in this small sentence, we have so many good informations, especially not just for now, but also what's going to happen in the future. Firstly, we're already seeing the fact that we're seeing another biggest weekend of 2026. We're making yet another record. It really goes on to talk about how we are going to see this plenty of times in the latter half of the year. Remember, Q3, Q4 is only going to get even busier with more and more movies being released. And a big part about this is the fact that movies now have more potentials than ever to obviously open up with a very high domestic box office. So what we're likely going to see is the same exact message, but going for the 6th movie, the 7th movie, the 8th movie, where it opens above 75 million, where we're seeing AMC having the biggest domestic weekend of 2026 because it's only going to get bigger. And this is important because firstly, we have to remember is the merch sales. So already from the ticket sales, it's going to do well. But then when you include in the merch, it's obviously going to get even bigger. And this is what we said with how we're going to be seeing even more movies coming out. We've got Scary Movie 6, we've got Toy Story, we've got others. And so, like we've said, you're only going to be looking at that same message countless times in this year because it just shows the potential. It shows where we are at right now. And it's why more and more people are eyeing up AMC, because it's going to show in their fundamentals how well they're going to grow and how much they are going to make. You can see here, using the revenue per patron of $22.10 in 2025, this would mean that on this weekend alone, AMC made approximately 110 million in revenue in one weekend. We're seeing the merchandise sold out, so it's potentially greater than that. So this is what we said. First, we have to understand AMC is in a even more efficient scale right now. And so this is still, in my opinion, using a lower revenue per patron. I definitely think it's going to be higher for this year, but I think it's still a good number to use. And already with that, we are seeing $110 million. And bear in mind, this is of course a revenue, but it goes on to talk about how this isn't going to be a one-time thing. We're going to be seeing this happen again multiple times, and just even the average stream of revenue is going to increase as well. So this is how we know that AMC is in the right position right now. We're talking about more and more people going to AMC. We're talking about the efficiency of AMC's operations. We're talking about how they're focusing on other means of making money as well. This is why we're closing up and why we're going to be eyeing up on that Q2 revenue as well. We already saw how important and good Q1 was. The reason why AMC Q1 was important was because it gave us an understanding of what we should be expecting this year, how well AMC is able to navigate through this year. What Q2 is going to show is firstly solidifying what we've already seen, but especially because going to Q3 and Q4, where it's going to be even bigger, the more efficient we are, the more we are able to cut down on unnecessary costs, the more we are able to raise revenue, raise profit. That's going to be so important, and that's what's going to attract even more investors than we are already seeing. And we can see right now the 2026 box office is only doing even better. We're seeing individuals like we talked about for this weekend, for The Mandalorian, these are all doing well, but when you take out the overall, it's still doing well as well. We've already seen great movies being released this year. We're seeing great movies continue to be released, and so this is how we said that this momentum is only going to last and get even bigger as time progresses. And that's why going into Q3, you need to keep a close eye. Going to Q4, it's going to do numbers for AMC. It's going to really accelerate AMC to a whole new level. And the summary of this is quite simple. Firstly, well, like we've said and we talked about, 5 million moviegoers. That's extremely good. We're seeing movies which are doing exceptionally well, which are making records. It's, I think, a sign of the many that's going to come. And in addition to this, we are going to see the merchandise sales. Remember, that will apply to future movies as well, especially with all of the other movies that we talked about is going to come out. And of course, the obsession with what's going on right now, the efficiency of AMC. You can see how it's all very positive news for AMC right now. And then again, the box office numbers doing better than what we are expecting, growing at a rate that is already higher than expected. That's what we need to see. And so with all of this, what we are seeing right now is the fact that demand is getting higher. And it's important because as we see demand increasing, we're going to be seeing it's how it's going to heavily exceed supply. And this is obviously going to create a market shortage. And because of this, we are going to be expecting rapid price increases. Remember, we are already seeing that there is a bigger inflow of capital into AMC than there is outflow. One of the biggest reasons why we're yet to see how it's not actually reaping the benefit, it's because there's obviously the dark pool, but it doesn't take away from the fact that more and more people want AMC shares right now. More and more people are buying into AMC shares, and this demand is only going to get bigger, and it will come to the point where dark pool isn't able to suppress this anymore, where they won't be able to keep up with creating enough synthetics to actually meet the demand. And when that happens, which at the rate of AMC and how it's growing, is going to be very soon. And when we see all those requirements being checked, when we see the exact factors happening, you're going to be expecting rapid price increases. And if we see here and we take a look at what we are looking for, the data of AMC, and to talk about how big a position is, you can see right now we're seeing that they're talking about official short interest to be 10%, but and the official short position to be 63 million shares. But what we are actually seeing is that there are over 1.74 billion synthetic shares coming in at a synthetic short value of $2.74 billion. And this is how we know that all these numbers that has been shown to us is obviously not true. They're obviously trying to report us a fake number and quote it as the official short interest. But this is how we know that currently we are going to be seeing the exceeding demand over supply, because whilst it's already having a massive supply, it's not going to meet how much truly people want AMC shares. And this is why we're seeing struggles with options as well. Remember, we already saw last week how they were struggling. This week is very important as well to keep a close eye on what's going to happen. But I definitely think that already they are struggling with what's going on, that already they are facing the liquidity problems that we have always been mentioning. And it's why we've been seeing recently the news articles really ramping up. Another sign of this is the fact they're not offering June weeklies on AMC. And now this is quite odd, because why would they not offer it at a time of volatility, especially at a time of extreme positive sentiment for AMC? And this is all to really take away the gamma pressure. Remember, we were already seeing how the gamma exposure on AMC was increasing. And ultimately, what that gamma exposure is doing is putting AMC at a level, at a place where it's going to accelerate its price increase. And so with anything that they can do to actually decrease that, they obviously want to do so, because then their short shares won't go up in flames. But the very fact that they are doing so, it again confirms the short positions they're in. It confirms the synthetic positions that are deep in the water as well. And that's what we are seeing. And you can see the AMC gamma is looking like it wants to take us to $2 as it acts as a magnet. Right now, where we're looking at AMC, we're still seeing that pressure. You can see how AMC today moves 0% despite everything that we have seen. Now, we know that this is normal. When you take a look at the short, when you take a look at the dark pool, you understand why this is happening. But I think this is still a very good sign in the sense that we are still seeing that pressure being built up. Despite everything they're doing, AMC is still actually not going down. And I think that's a very big sign. And ultimately, we have to understand the price of AMC is unrealistically priced at $150 to $160. Remember, the reason it's not at $10 to $20 is because of the stock was 10 or higher. The smaller amount of dilution will cure the balance. And this is why we ultimately are not seeing AMC go up, because there's actually multiple reasons. Firstly, we talked about this, because if AMC was at $10, you can imagine how easily it is able to raise a large amount of money. But more importantly, is that if AMC were to be at $10 or $20, the amount of shorts that will go underwater would already be extreme. And so there's plenty of reasons, but it doesn't take away from the fact that AMC is extremely discounted and undervalued at its current price point. And it's why we're seeing more and more people trying to accumulate as much as possible. Now, what we are looking at is the updated AMC short interest, but what we are seeing right now is that there is going to be shown as signs of desperation, because if we see here, what we are seeing was that Fintel showed reported short interest was over 15% through market close, but the updated version now is 9.13%. Now, the reason why this is important and why this needs to be talked about is obviously because of the fact that we have seen plenty of times that these are self-reported data. And despite what they've been saying, when we take a look at the actual data, and we've seen this from other various platforms like such as Easy Peasy Trading, where it's shown that there was over 300% in synthetic short interest. And we've seen also cases of how the official short interest was showing how it was decreasing. Yet when you take a look at the synthetic short interest, the total short interest, it was actually increasing. And so it just goes on to talk about how they're trying to cover up on the surface, but deep down, they're creating more synthetics than ever. And you can see and understand the reason for this, because what we are looking at right now is Robinhood CEO, who talked about how tokenization could have prevented them from what happened back in 2021. And this is what and why we're talking about how tokenization is a bad thing. You can see how they said that it wouldn't have allowed them to be in that position where they were going to get margin called. And so the very fact that the SEC is delaying to this is why we've said there's a positive thing. It's because brokers, short sellers, the market makers, they are all desperate for this, yet they're not seeing it right now. And it just goes on to talk about how this is going to put them in a very, very bad position. Another side piece of news is that GameStop now owns 7.5% of eBay. I definitely think that this is a good sign to look at as well in terms of what they wanted to do, and it's something that will definitely bring more volatility. Another thing is more institutions who continues to pile into Highcroft as well. I know that there are apes who have bought into this, and of course AMC still has ownership in HYMC as well. Again, just another good sign of what's positive in the future. Another thing is that currently we're seeing how short squeeze risks are rising, and you can see the biggest risk for US equities might not be a decline, but short sellers being forced to cover. And when we talk about shorts covering, which positions are they going to get hurt the most? And for those of you who guessed AMC and GME, you will obviously be correct. And that's because of the synthetics that we've talked about. And that explains exactly why they're trying to suppress AMC and GME as possible, because they want to find alternative ways to cover AMC without causing the price to go up 1,000%, 10,000%. And so that's why we're seeing all of this happening right now. But the very fact that we are seeing short squeeze risk rising, it already is telling what's happening within the market. Another big thing is the Japanese yen. We talked about how the government is continuously intervening in the Japanese yen when it goes to 160. We're going to be seeing that happen very soon. And it's important because currently right now in the US as well, we're not seeing good things happening right now, especially when we see the reverse repo having extreme volatility. Now, for Wednesday, it was 1.8. For Thursday, it was 1.7. But the very fact that we are seeing this going from 0.7 all the way up to 24, then back down to 1, I think it's something that needs to be talked about and understood, as that currently there are extreme liquidity issues that's happening within the market. And if we take a look at right now in terms of the potential things that they want to do for naked short selling, we can see how effective naked short selling was back, the ban of it was in South Korea. Now, would America do the same thing? I'm not too sure. Definitely has been talked about it, but it just goes on to talk about how beneficial it is for the market. And then finally, we're seeing more and more people pulling money out as if it's going to be the end of the world. And so that's something to also look at. As always, known as Financial Advice, and I'll catch you guys next time.